Yeah, good morning, guys. I hope you're good. Okay, this is how I was able to make a pips from BTC. That was from Sunday. First of all, I made my analysis from the monthly, like top-down analysis. You all know that before we do anything in trading, we have to know our top-down analysis first, of which BTC is on a range. And when banks are in, they are already stacking orders. And that is what we are seeing in BTC. And right now, BTC is at this fair value gap. You guys can see it's testing this fair value gap right now. It's at this fair value gap already. You have to see it clearly. Let me just bring it down here. This was where it has been holding. That's the fair value gap there. And for me, I'm still expecting a sharp move to the downside. It's either to 14,000 or 12,000, just sharp move with a long wick candlestick. That's what I'm still expecting. So now we know where we are in the market. We are consolidating, but in this consolidation, we still try to pull out some profits out from that consolidation. So we move down to our weekly time frame. So you can see that even normal people who are really trading with big funds does not trade this. They stay out from the market. But for we make use of the little time frame to just pull up some profit out from the consolidation, but it's very risky though. So this is our weekly, and we know that our weekly is really consolidating badly, like very bad consolidation. So I made my analysis and I looked and I see that we are still bearish, but our buyers for the day are still bullish and the week is bullish. So I looked at it and I went to my daily to really find my entries to know where I'm really going to be possibly searching for an entries, of which what I'm looking at right now, that I'm seeing, this bullish candlestick has a lot of imbalance in it. So, but on our weekly, we have already tested the imbalance, but for me, what I'm seeing here is not okay enough for the imbalance to be filled. It's not okay because it's just the same as that area that we left somewhere here. If you guys can see it, you see, you are just making equal highs, of which I'm expecting these equal highs to be removed because that's the liquidity in the market. So at least to be removed and maybe somewhere here. So I'm expecting the price to come up somewhere here with a long wick candlestick, or just, just to show me something like this from here, touching here, then making some things like this, then giving me like double top or maybe some other chart patterns. So from what I'm seeing here, guys, I'll really tell you that we are still going to go bearish. But for the meantime, you have to pull out some little profit from the market through what we're really seeing here. So from this, I play down to my 4 hours. Wait, I have to delete this so that it will not be too much this thing for us. Because okay, we just remove this. So right now, to show you guys the fair value gap we have here in these 4 hours, you guys can see how it is. From this place to this place, of which we have not really tested this gap at all. We have not even near it. So you guys can see this is where, in fact, For you, you do call liquidity, maybe, yeah, liquidity at this. And in our fair value gap area are where we'll be searching for entries. Always catch this. We make sure we search for entries in our fair value gap area. And if you are to look closer on every fair value gap that we have, starting from the weekly to the monthly, you see that we filled it and we took entries. If you look at this place, this was around August. So we had a fair value gap here that was filled. If you look at it, it was filled during that time. It was filled here from here. You can see it's okay. Let me say here. It was filled around here. We came, we timed our entry here, and we sold off from there down to tell you how strong a fair value gap can be. I don't know if you guys really understand what I'm saying, because I'm using smart money concepts. So these are how I time my entries, and these are how I monitor what I'm doing in Forex and take my entries. So the same thing I did on Saturday being 22 of October 2022. So I took this trade from here, and for me, what I was timing is this, guys. I was timing this fair value gap so that I can place my entries from there. As you can see, this was the fair value gap I was timing for price to come and do something like touch with wick and give me a possible entry. So that was what I did. I was all waiting. I know when this move happened. This move happened on Friday. I know when this move happened. So after the move happened, this was what I did. I put out my range volume profile. I put it out from here. Then I try to check where the support is. That will literally turn to resistance in case anything happen. Of which you can see this red line. This red line was our support where price have tested multiple times, of which we broke the support and we entered this fair value gap. So this place you see is where the orders is, and he has to take this order and deliver it. You understand? This is the demand. So we can call here demand. Some people will be like, okay, is the last black candlestick before the move? Yeah, that's fair value. That is where the order is. So we have to take those order. Let me just label it so that you guys see it. Demand zone. Demand zone. Or you can say killer zone. Killer zone, that's where you time your entries. So I saw this and I'm like, man, because each time there is a long move in the market, time that's close candlestick from there. That's your fair value gap. That's an imbalance in the market, in using a normal term of words so that you guys will understand it very well. So I timed it. I came here, I pull out my long position, I place it like this. And my first target was here, because you have to target the buy side liquidity to be removed. So my first target was here, of which we had a little, because all these things they have a big meanings in the market too. I timed this little fair value gap with that liquidity that is sitting there, that buy side liquidity. I pull out and I'm like, okay, I'll pull my first target here. I pulled out my first target here. And again, where I was timing again was here. This was my target again, of which you see literally just little to remove it. So I'll just say here, just to time your entry very well. But for me, I added it here, of which I moved out from the market as soon as I took my first profit. That was what I did. So I timed it here, and my next target is here. That was where my next target is to be removed. Of which, guys, gold is still going to be bullish. I mean, I'm sorry. What's it called? This BTC is still going to be bullish. Our buyers are still going to be bullish, like the way I'm saying it. So this was what I anticipated, and my third target was here, my second target was there, my first target was here, and we really did a lot in the market. Let me show you guys with proof, because most of you will be like, oh, did you actually took this trade? Are you sure you took this trade? I took the trade, and that was the profit. Why they said my country? Oh, guys. Okay, that's it. I don't know what my phone is doing, but I'll still reconnect to see what's up. So that was what I did in the market. So I was able to pull out that stuff I pulled out then. That was it. So for me to let you know that fair value gap is very strong in the market. When you use it to time your entries, you are there to make a lot of picks from the market. So this was how I made that pick from the market, and it was $90, $90, $90 because I entered at once. So $90 into three should be like that should be 9 times 3, 90 times 3. That should be $270. That was what to pull out from the market on. Okay, my it timed today. This thing happened today. That was okay, yesterday, Sunday. So it moved me out from the market and took my hit my target. So this is how I trade, and make sure you guys follow up and catch up with whatsoever that is happening. Love you all.